Hi, and welcome to this video. We will continue with our Forex trading guide for you, giving you a technical analysis and chart patterns. The cup and handle. The price action. In an uptrend, price action finds first resistance, number 1, where it reverses direction and goes downwards steadily till finding first support, number 2, which will be the lowest low in the pattern. The price action reverses direction from support, number 2, and goes upwards till finding the second resistance, number 3, and completes the cup formation. Price action reverses direction from resistance, number 3, and goes downwards till finding the second support, number 4, which must be higher than the first support, number 2. The pattern is completed when price action reverses direction from number 4 and goes upwards till it breaks the cup and handle surface at point 5. The cup and handle surface is identified by drawing a trend line connecting both resistance of the cup formation, points 1 and 3. Handle formation might be shaped as a flag facing away from the surface. Cup and handle surface can be skewed. Volume usually decreases as the pattern is being formed and increases when breaking the surface or retesting the breaking rate. This pattern is commonly found at long-term time frames. Let's talk about the trading the pattern. Trade entry. The pattern is traded after price action breaks the surface at point 5, either with an entry after the breakout or after a possible retest of the breaking rate. Take profit. Identified by measuring the vertical distance from the cup's peak, number 2, to the cup's second resistance, number 3. That measurement is then applied from the breakout point, number 5. Stop loss can either be the breaking point, number 5, or the handle's peak, number 4. Now the pattern's reward risk. When using the handle's peak, number 4, as stop loss, the pattern's risk reward will be better when the handle's height, numbers 4 and 5, is relatively short compared to the cup's height, numbers 2 and 3. When using the breaking point as stop loss, the pattern's risk reward will depend on the entry rate breaking rate distance compared to the height of the cup formations, numbers 2 and 3. Always remember that both stop loss levels explained above are absolute. The actual stop loss rate for your trade setup should be a bit beyond those levels to give the trade setup some room to breathe. And of course, calculation for the position size and risk reward should be done with respect to those rates. Let's see a cup and handle real example. Trade setup. Trade entry at the closing rate of the candle after breaking the surface at point number 5. Take profit 434.4 pips, usually measurement applying from point 5. Stop loss number 1, 96.8 pips, risk reward 4.488 set at 14% of target measurement beyond absolute SL1. Stop loss number 2, 312.6 pips, risk reward 1.390 set at 7% of target measurement beyond absolute SL2. In this example, the retracement after entering the trade reaches SL1, which would result in a losing trade if that stop loss level was used. The case of the inverse cup and handle. Price action. In a downtrend, price action finds first resistance, number 1, where it reverses direction and goes upwards till finding first support, number 2, which will be the highest high in the pattern. Price action reverses direction from support, number 2, and goes downwards steadily till finding the second resistance, number 3, and completes the cup formation. Price action reverses direction from resistance, number 3, and goes upwards till finding the second support, number 4, which must be lower than the first support, number 2. The pattern is completed when price action reverses direction from number 4 and goes downwards till it breaks the cup and handle surface at point 5. An inverse cup and handle real example. The trade setup. Trade entry at the closing rate of the candle after breaking the surface at point 5. Take profit 389.3 pips, usual measurement applied from point number 5. Stop loss number 1, 104.6 pips, risk reward 3.722, set at 21% of target measurement beyond absolute SL1. Stop loss number 2, 199.5 pips, risk reward 1.951, set at a 7% of target measurement beyond absolute SL2. The following which which are neutral patterns. They can be a reversal or continuation, thus the trend prior to the pattern formation doesn't really matter. Since the following wedge a bullish pattern, all touches to the wedge upper border will be referred to as resistance, and touches to the lower border will be referred to as support. Price action finds first resistance, number 1, where it reverses direction and goes downwards till find its first support, number 2. Price action reverses direction from support, number 2, and goes upwards till finding the second resistance, number 3, which must be lower than the first resistance, number 1. Price action reverses direction from resistance, number 3, and goes downwards till finding the second support, number 4, which must be lower than the first support, number 2. The pattern is completed when the price action reverses direction from number 4 and goes upwards till it breaks the wedge upper border at point 5. For the pattern's shape to converge, the downslope of the wedge upper border, numbers 1 and 3, must be steeper than that of the lower border, numbers 2 and 4. The price action inside a wedge formation is a downtrend, and since its target is a bullish one, the breakout volume should be considerably high to confirm that bulls are entering the market. This pattern is commonly found on medium and long-term time frame. Let's talk about the trade in the patterns. Trade entry. After breaking the wedge's upper borders at point 5, which an entry after confirming the breakout. Take profit, identified by measuring the vertical distance from the wedge's highest high, number 1, to the wedge's lowest border. That measurement is then applied from the breakout point, or number 5. Stop loss, the wedge's lowest low, number 4. Now the pattern's reward, risk. The steeper the upper border's downslope than that of the lowest border, the better the risk reward. Risk reward improves when the breakout is more near to the wedge border's intersection point. Always remember that the stop loss level explained above is absolute. The actual stop loss rate for your trade setup should be a bit beyond that level to give the trade setup some room to breathe. And of course, calculation for position size and risk reward should be done with respect to that rate. Now let's see a follow wedge real example. Trade entry. At the closing rate of the candle after breaking the upper borders at point 5. Take profit of 254.8 pips, usually measurement applied from point number 5. Stop loss number 1, 72.5 pips, risk reward 0.514, set at 21% of target measurement beyond absolute SL1. Stop loss number 2, 158.6 pips, risk reward 1.607, set at 7% of target measurement beyond absolute SL2. The first break-in candle was followed by a long bearish candle that closed inside the wedge, thus it was treated as a false break. Right after that long bearish candle, a long bullish one was formed and broke the upper borders again, followed by a candle that closed outside the wedge, where the trade entry was decided at the candle's closest rate. The rising wedge. Wedges are neutral patterns. They can be a reversal or continuation, thus the trend prior to the pattern formation doesn't really matter. Since the rising wedge are bearish patterns, all touches to the wedge upper border will be referred to as support, and touches to the lower border will be referred to as resistance. Price actions find first resistance, number 1, where it reverses direction and goes upwards till finding first support, number 2. Price action reverse direction from support, number 2, and goes downwards till finding the second resistance, number 3, which must be higher than the first resistance, number 1. Price action reverse direction from resistance, number 3, and goes upwards till finding the second support, number 4, which must be higher than the first support, number 2. The pattern is completed when price action reverse direction from number 4 and goes downwards till it breaks the wedge's lowest border at point 5. A rising wedge real example. Trade entry at the closing rate of the candle after breaking the lowest border at point 5. Take profit 607.3 pips, usual measurement applied from point 5. Stop loss number 1, 178.4 pips, risk reward 3.404, set at 21% of target measurement beyond absolute SL1. Stop loss number 2, 369.7 pips. Risk reward 1.643, set at 7% of target measurement beyond absolute SL2. The candle right after the breaking candle closed extremely near to the witch's lower border and had a wick inside the pattern. Thus, the candle after that one was used to confirm the breakout. Thanks for watching. We hope you learned with our content. Please join us in future videos to continue with this series.